Hello guys, welcome to another weekly breakdown video. Today I'm backtesting the first week of December 2023. Whereas as you can clearly see, as this is our weekly breakdown video, on the weekly time frame you mark the supply zones if the market is going up, and we mark the demand zones if the market is going down, to look for potential rejection or to look for the target where the market might head until it rejects. As on the weekly, we can clearly see the market has been making lower highs, lower lows, and it's at the lower high phase right now to then continue to the downside. I marked this supply zone on the weekly. This was my draw of liquidity. As in my previous videos, I've shown my analysis, why and how I mark these zones, and it is so self-explanatory now. Whereas on DXY, the same opposite thing. The market has been trending now bullish, making higher highs, and this is the higher low phase. So we have to mark a zone where the potential rejection or the potential trend reversal might happen from. So this was the demand zone. I was looking to look for potential rejections, and this weekly candle is clearly showing a rejection. This is a bullish pin bar, bro. We understand candlesticks because we have studied. So this is a bullish pin bar. Look, last time when a bullish pin bar like this happened, what happened? Next week continued heading towards the upside, and when a bearish pin bar appeared, the market reversed. So we can anticipate the same thing to happen all over again. And also this was an NFP week. So on Monday there was no news. Tuesday there was ISM services PMI, job opening, and overall this was a NFP week, so we have to be careful. On Monday there was no GU news. We don't trade EU, so if there was high impact news like all day or CPI, PPI on Euro, then we would have been a little bit concerned. But this type of news we don't care. So going on Tuesday there was also news. So let me show you the weekly, so you understand the weekly, right? And on the weekly time frame on DXY, there is a fair value gap right here, which the market will have to fill some point at time. As you can see on the weekly, whenever there is a fair value gap, market fills up. Whenever it forms a fair value gap, it fills up before continuing to the upside or to the downside. So here we can anticipate this fair value gap to get filled. When will it fill it? Don't know. We can't know that, but we have to adapt. The market literally shows us if it wants to fill it up. It cannot do something out of the box. Yeah, it can, but most of the times it will show you. If you're a good listener, the market does speak to the good listeners. So now, looking at the previous weekly candles, my bias is clearly bullish for the week on GBP USD. Clearly bias bullish. And going to the next week, going on DXY, looking at the previous weekly candles, my bias was bearish, but looking at the last previous weekly candle, which is the most important, it's clearly a bullish pin bar. So my weekly bias comparing the US dollar and the GU was not clear. So whenever that happens, what I tend to do is I go to Euro, and on Euro also this was a bearish engulfing candlestick, and we know whenever there is an engulfing candlestick, it probably wants to go and fill up it probably is showing that the next week might continue heading to the downside, and also there is a huge fair value gap here which the market can fill before continuing to the upside. Also the Euro is trending down, making lower lows and lower highs because they do inverse to DXY, yeah. And also there is a fair value gap on GBP USD, but there is no signs that it wants to go and fill up this fair value gap yet. So this was my weekly analysis. It was not clear, so the weekly bias was not clear. So whenever the weekly bias is not clear, what I tend to do is I tend to trade the daily bias. I have also written here something. Okay, so we mark the supply and demand zones in the weekly and fair value gap to determine where the overall trend is headed and where it might go until it reverses. That's why you mark the supply zones when it's going up and demand zones when it's going down. 100% agreed. This is how we mark. This is what we mark on the weekly, which I figured out through backtesting. So I'm gonna do that even in the live markets. Doesn't matter. That works for me. So obviously the weekly bias is not clear, so we'll adapt according to the daily bias and see what happens. Okay, exactly what I've said, right? When the weekly bias is not clear, we trade the daily bias. Continuation setup loss here with the bias, everything was there. Okay, also there was a continuation setup. Let me see. This week we are seeing a lot of manipulation in the markets because it's a NFP week, and also whenever there is an NFP week and also you have to keep in mind, bro, it's December. So on December there is a lack of volume in the markets because of the bank holidays and everyone is on holiday, right? Nobody wants to trade on December, so that's also one reason. So you have to be very careful going on December's, and yeah, at the end of the year and starting of the year. So this week we are seeing a lot of manipulation in the markets, and also again a proof that the markets are heavily manipulated in the high impact news days. I've also figured it out. I will not trade NFP CPIs, and I have also noticed if a trend is trending in a month. Let me show you a hack. 4th September, first week September, the market was bearish. Yeah, the whole September continued bearish, you can see. And when October came, it was consolidated, it was bullish. I was looking for buys, and then it was choppy. When did the choppiness end? When October end, bro. Clearly there is a pattern here. When October end, the choppiness of the market ended, and then it started to trend again on November, and literally November trended all over to the upside. Now let's see what December does, and according to what the first candle of December does, we will anticipate the movement. Okay, we will always adapt to the condition of the market. This was a very in-depth weekly analysis video. So now, without wasting any time, let me clearly show you the daily bias and show you the trades that I've taken. So on DXY we can clearly see the trend. Now we see the trend on the DXY. Bias is not clear. They are doing sort of same things, but if I am looking for something, obviously I will adapt to the daily bias. But if you ask me, you have to tell me a weekly bias, then it will be bullish on DXY and bearish on GU, because whenever they are doing the same thing, we go to the EU and decide our bias, which I've done in this. So Friday closed, look, the trend is bearish, yeah, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And going on Friday, it gave a bearish pin bar. So if I'm trading the daily bias on Monday, I will look for sells in DXY, so which will be opposite, which will be buys on GBP USD. Just look at this price action. This is not clean, bro. Friday did body close above this. It was an engulfing, but it was also choppy, man. It didn't make sense to go up. It made sense, but it was just not that clear. So what I will do now, I'm looking for buys. Whenever I'm looking for buys on DXY, I'm looking for sells, and on DXY I will only go to show you the bias. Obviously I analyze DXY as in depth as I do GU to get a very high probability, and I also compare it with EU, but I cannot show that all of that in one video, so we'll make another video in the future. And also I have to figure out in the live markets. In the live markets I will do that, but this is backtesting and there's a lot of backtesting to do. So yeah. So on 4 hourly I see the market structure. This is the low that caused this high, and the market has been a little bit choppy around here. So on the 4 hour there's nothing. As you can see, I marked the week high, week low, and so on and so forth. Whereas on the H1 I was looking for this fair value gap and this demand zone to trade from. Look at this. This was the market structure. You can do it for yourself. I see the market structure on H1, and I'll not show you everything, but this was the low that caused this new high, change of character, fair value gap, with the bias being bullish. Everything we want to see was here, right? So we could have anticipated to trade this zone. So what happened on Monday? We wait for the Asian range to close. The Asian range closed. So at this point, when the Asian range closed, I go to the lower time frames like M15, M30, and look, M30, the markets, this is one move on the hourly, right? This is one impulsive move on the hourly, but on the 15, you know what? This can be higher highs and higher lows. So we will adapt to every higher low, because we don't know where the market wants to react from. So we have to adapt to every structural point to adapt to wherever the market might reverse from. And on the 15, this is higher highs and higher lows. In 1 hour, it's one impulsive move. Yeah, and you can also argue, bro, on the 15 minutes the market has now shifted structure to bearish. Doesn't matter. Maybe this is the hourly higher low, which might look something like, on the 15 it might look something like this, a whole shift of structure, but we don't consider that. That's why we look the market structure only on the higher time frames like hourly. And there was inducement here before the move. We took the trade somewhere around here at our timing, which is 8:30 p.m. AM UK time. This was a genuine loss, to be honest. This was a loss that I've taken on Monday. Losses are part of the game. This was just our setup, everything was here, and this was a genuine loss. The higher time frame were not that clear, but yeah, even though I would have taken this loss any day, to be honest, I've taken a loss here, right? After this inducement, after the inducement of this position, look at this rejection candle. If you have entered after this rejection candle right here, you could have got your 1:3 somehow after filling up this fair value gap on the hourly, literally filled up to the T. And fair value gaps trade do work, but they are low probability. This was also a fair value gap trade, sorry. So now we go to the Tuesday. Now we go to see what Tuesday is doing and look for bias for Tuesday. As you know, my weekly bias is not clear and the market is also not doing anything. It is just choppy. So what I will do, I will go with the daily bias. So Monday close something like this, not clear. GU is not clear. So now I will go to DXY. In DXY, it's so clear that the market is bullish. So I am looking for buys on DXY, whereas looking for sells on GU to potentially fill up this fair value gap, targeting this fair value gap if I'm selling, and if I'm buying on DXY to potentially go around and take this liquidity somewhere around here. Take this daily liquidity before entering this supply zone. Simple. All we are doing is the same thing. No need to complicate things. The more simple you keep it, the better. So on the 4 hourly now, even now this is the low that caused this high. The market is still choppy. Until and unless the market body closes below this week, we will not consider a change of character. And yeah. So going on Tuesday, my bias was bearish, looking for sells. And if I'm looking for sells, there was a H4 fair value gap here to fill, remember? And I was looking to trade this supply zone. If the Asian range did something like this, it makes sense to trade this. But if the Asian range did something like this, mate, then this supply zone will be irrelevant and I will have to watch for another supply zones right around there. So I waited for the Asian range to close, and Asian range closed something like that. As you can see, it filled up the 4 hourly fair value gap, and it was a continuation model, I guess. Yeah, it was a continuation model. There was a M15 fair value gap, and also there was M15 supply zone right around here. The Asian low liquidity got swept. The market came in, rejected, filled up the fair value gap, rejected from the supply zone, took the trade. Even this was a genuine trade. This was a genuine fair value gap trade. I have also written it, I guess. Continuation setup loss here with the bias. Everything was there. Yeah, this was a continuation setup. Everything was there. I would have taken this trade in the live market also. This was just a losing trade. Losing is part of the game. And you can see the market did make the move, but without us. It swept this. It induced us. Yeah, it induced us. It induced this equal highs liquidity right around here. There was equal highs, and the market is drawn towards the equal highs because of high liquidity. So this equal high liquidity was taken. Asian high liquidity was swept, and then boom, it literally had the move to the T. And also there was news on Tuesday. Let me show you the news. Monday there was no news, as I've said. Tuesday there was a lot of news. ISM services, PMI, JOLTS job opening. And on Wednesday there is ADP non-farm employment change, so we have to be careful, NFP. And on Thursday there is unemployment claims, and Friday we will not trade because of NFP. Wednesday ADP non-employment, Thursday we can trade, and Friday we can't. So that was something. And going on Wednesday, yeah, going on Wednesday my bias was clearly bearish. Now as you can see, Monday closed bearish, Tuesday closed bearish. Going on Wednesday I was looking for sells again, because I go with the trend, I don't go against the trend. And also this on the DXY, it's clearly trending bullish, making a bull move, and we are targeting this sort of draw of liquidity right here. So now let me show you the call out, what I've written here. When the trend is switching, first the lower time frame shift structure first, and we consider looking for change of characters from H1 time frame and so on. Yep, 100%. So you can see the market was trending down. Yeah, now the market sentiment is shifting to bullish. So what I will do, I will go to H4 to look for market structure shift, like 4 hourly, and also I will go to H1. If 4 hourly has not shifted structure or changed character yet, we'll go to H1 to look for change of character, and we'll look for trades from there. Simple. And whenever there is no fair value formed and the price has rebalanced, like it is done here, like if this is a rebalance, right, rebalance, no fair value formed, this is a very strong sign of trend continuation that I also have noticed right around there. So now going on Wednesday, I'm looking for buys on DXY, which will be sells on GBP USD. And also if I show you EU quickly, EU is filling up this fair value gap to the T, and we can continue until and unless the market shows us otherwise. We will continue to look for filling up this fair value gap. Okay, so let me not make this video very long. Let me quickly show you. There was a change of character right around here. Now I have no, why you may argue why you didn't mark this, because I have already marked this break. I have already marked that when I was backtesting, and now I have marked this break of structure. The 4 hourly has changed character. The hourly supply zone was this one, which I was looking for. Now the hourly supply zone, there was previous day low, previous day high right around there. That will be our targets. The previous day low was taken, so going on Wednesday, ADP non-farm employment change, right? So I was looking for sales from this sort of supply zone somewhere around here, which I have also marked on DXY, the demand zone. So at this point I go to the M15, so look for sales, and this was the zone which I was looking to trade from, and I guess I didn't took any trade. Okay, this was again a continuation setup from this M15 fair value gap, which was a break-even trade, or which could have been a break-even trade. I guess it was a winner trade on Wednesday. Look at this. If you always give your stop loss room to breathe, just like you can see here, the market can go and manipulate. And also if the trend is very strong, the market is very trending very with huge volume. Yeah, it always doesn't need to go and take the Asian high. As you can see here, it didn't go and take the Asian high. It filled up the fair value gap, manipulated, gave an inducement, and then boom, made the move. So Wednesday was a winning day for us, and our target would have been the previous day low if we are bearish, and which the market did go and take it, because the market is drawn towards liquidity, we know that, and it did go and take the previous day low, which will be our targets. And if the previous day low in bearish is not taken early on in the day, that's a high probability day. So going on Thursday, nothing has changed until now. The daily fair value gap is filled, and after filling up the daily fair value gap, it is not showing any signs of rejection. So I will continue to look for sales until this demand. Let's see. And also the market has now taken this draw of liquidity, I guess. Yeah, the market has taken this draw of liquidity right around here, but it has not shown any signs of rejection. It is clearly a continuation, rebalance the price to the T, and then body close above the previous day high. So I will be looking for buys on DXY, which is sells in GBP USD. And also on Thursday we can trade because there's unemployment claims, only one news, and Friday probably we will not trade because of NFP. So now going on Thursday, the market in the 4 hourly has clearly changed character, as I've shown you, and also now it has broken structure to the downside. This is the supply zone we are looking to trade from. So if I go to the hourly, yep, my charts are looking a bit messy because I have not deleted anything, but I understand it because I've done it a gazillion of times now. So this is the supply zone. Only focus on the nearest price action. Okay, this is the supply zone I was trading from if I was bearish. So I will wait for the Asian range to close. The Asian range closed, Asian high liquidity got swept. M15, this supply zone, you may argue, why did you mark the supply zone? Because this was an M15 supply zone. The market can have its move even from here. Looking at the trend, strength of the trend, the volume is very important. Yeah, so this M15 supply zone, why did you trade? You don't trade as supply or demand zone just because the market has entered there. No, clearly we can see this supply zone was not respected. Look at this candle. This literally break through this supply zone like it was not even there, right? So what we will do, we will not trade that. And we took our first position right around here, which was a break even, or you can argue, yeah, break even trade, or even a loss, no problem. It gave inducement, one inducement, second inducement. Our bias was correct. The market did went down, but what it do? It gave inducement once, inducement twice, and at the third time on the hourly. To how can you avoid this kind of inducement, or at least reduce? You go to the hourly. On the live markets, I'm not gonna watch the markets on M15 because there's a lot of noise and a lot of inducement here. So this was a genuine loss if I was looking at the hourly. And here, if I was looking at the hourly, I could have literally avoided one inducement here and catch this move, catch this winning move, right? So on the hourly, this was the move, and yep, it is what it is. So now going on Friday, my bias is clearly, Thursday was going on Friday, my bias was not clear because now the market is starting to reverse and we don't know what the Friday might do as it's NFP. And but looking at DXY, my bias was clearly bearish on DXY, and I'm also trading the daily bias. So now my bias is bullish on GU. So, and also on Friday there was news NFP, so not a high probability day to trade. And the 4 hourly has not changed character to the upside. We will look for change of characters obviously because the trend is shifting. Yeah, I have written there. At least on the 1 hourly change character to the upside somewhere around here, and this was the demand zone that changed the character. So now going on Friday, I was looking for buys from this sort of demand zone, but this was NFP. So also keeping that in mind that it was NFP and very low probability day to trade, and it was a loss because obviously NFP days are very high probability to get manipulated, and this position of mine was manipulated. Everything you want to see in a trade was here: rejection, higher time frames, everything was there, daily bias, everything was there, previous structural liquidity, H1 demand mitigation, respecting the previous day low, targeting the previous day high. Yeah, it was manipulated, and then news came in and literally dropped to the downside. So yeah, this was the overall week. Simple. We got some continuation setups, we got some of our setups, and yeah, this week showed us if we trade the daily bias, it is also profitable. And yeah, you have to follow the bias, you have to follow the market what is doing. Now we can see the weekly has clearly filled up this weekly fair value gap, and it's not rejecting. This is not a rejecting candlestick, whereas on EU it has filled up the weekly fair value gap, but that's a continuation candle. And also on DXY it is starting to fill up this fair value gap right around here. So we can anticipate next week to go and fill up this fair value gap on the DXY. So my bias will be bearish, which I will show you on the next video. So this was a very informative video. Hope you guys learned something.